Hey there, crypto enthusiasts and savvy investors. Bitcoin, the king of cryptocurrencies, has taken us on yet another rollercoaster ride. From nearing a jaw-dropping $100,000 to now settling around $91,000, everyone's asking, is this the perfect time to buy? Today, we're diving deep into the reasons behind this dip, how the market is shaping up, and whether it's the golden opportunity we've all been waiting for. Let's break it down and crack this crypto conundrum together. So, what's happening? Bitcoin recently soared close to that magical $100,000 mark, a milestone that had bulls cheering worldwide. But just when it seemed unstoppable, the market took a sharp turn, sliding back to $91,000. This sudden drop left many scratching their heads. Was it a bubble bursting? Or is this just a natural correction after a prolonged rally? Here's what might be at play. First, there's profit-taking. After a massive rally like the one Bitcoin has experienced, it's only natural for many investors, especially institutional ones, to lock in their gains. Imagine you've held Bitcoin since it was $30,000 or $40,000. Now that it's tripled in value, wouldn't you consider selling? While this may seem logical for individuals, when large whales, those holding massive amounts of Bitcoin, start selling, the market feels the pressure in a big way. This is what leads to corrections and, in some cases, market panic among retail investors. Then we have the macroeconomic environment. It's no secret that cryptocurrencies, while largely independent of traditional financial systems, are still heavily influenced by global economic trends. Central banks worldwide are tightening monetary policies, raising interest rates to curb inflation. Higher interest rates often make riskier assets, like cryptocurrencies, less attractive compared to traditional investments such as bonds or savings accounts. Combine that with persistent concerns about a potential economic slowdown, and you've got a recipe for investor caution. Add to the mix the ever-present regulatory uncertainties. Governments worldwide are grappling with how to regulate crypto markets. While some countries are rolling out red carpets for innovation, others are tightening restrictions. Recent delays in approving Bitcoin ETFs, debates around crypto taxation, and threats of stricter anti-money laundering regulations have all contributed to short-term bearish sentiment in the market. But here's where things get interesting. While these factors may seem daunting, history tells a different story. Bitcoin has always been a tale of resilience. It's survived countless downturns, regulatory battles, and even existential crises. Historically, Q4 has been a strong period for crypto, often acting as a springboard for future growth. On average, Bitcoin has posted gains of over 20% in Q4 over the past 5 years. In many ways, it's the financial equivalent of holiday magic, turning dips into opportunities for massive growth. Take 2018 as an example. Bitcoin had plummeted from its all-time high of nearly $20,000 to under $4,000. Many declared it dead. Fast forward to a few years later, and those who bought in during that bear market are now reaping massive rewards. This historical pattern isn't guaranteed, but it's certainly worth considering when deciding whether to invest. Now, the big question: should you buy Bitcoin during this dip? Timing the market is tough, but there are a few indicators that can guide your decision. First, let's look at technical analysis. Bitcoin's current price of $91,000 could act as a key support level. If it holds steady, this might be the foundation for its next rally. Tools like RSI, Relative Strength Index, and moving averages can help identify whether Bitcoin is oversold, signaling a potential buying opportunity. Another clue lies in on-chain metrics. These data points reveal what's happening beneath the surface. For instance, there's evidence that institutional investors are quietly accumulating Bitcoin. When the big players start buying, it's often a sign of confidence in the market's future. Retail investors might want to pay attention to these trends to ride the wave alongside them. Still unsure about the right time to invest? Consider dollar cost averaging, DCA. This strategy involves investing a fixed amount regularly, regardless of the price. It's like putting a little aside each month into your favorite snack stash, except in this case, it's Bitcoin. DCA helps smooth out the volatility, ensuring you don't go all in at the wrong time. Of course, no investment is without risks. Bitcoin is known for its volatility. Prices can swing wildly within hours or even minutes. If you're not prepared for that, it might not be the right fit for you. Additionally, macroeconomic factors like prolonged inflation or central bank tightening could continue to weigh on the crypto market. And let's not forget regulatory risks. Governments can, and do, change policies quickly, which can have an immediate impact on the market. So, is this the perfect time to buy Bitcoin? If you believe in its long-term potential and are ready to navigate some short-term turbulence, this dip could be a golden opportunity. But remember, investing is personal. Always do your own research, manage risks carefully, and only invest what you can afford to lose. Now it's over to you. What do you think about Bitcoin's recent dip? Is it a buying opportunity, or is it a sign to stay cautious? Share your thoughts in the comments below. And hey, if you found this breakdown helpful, smash that like button, subscribe to Bank and Balance, and turn on the notification bell. Together, we'll keep decoding the mysteries of finance and investing. Until next time, stay smart and stay invested.